Welcome everyone to the Kendall Report. It is Thursday night, the final video for the week. Hard to believe I saw somebody comment, where'd the week go? Yeah, where did it go? Crazy week to say the least. Well, folks, before I get into tonight's video, make sure you subscribe, hit the like button. We're not getting those 1,000 likes anymore. We really should be, I think. But anyway, make sure you hit the like button. Hit the notification bell so you know when I'm coming live every night. So let's talk about what's going on here. Big stuff going on. I think the title of this video is Bank of Japan on Red Alert. And we're printing over 150 on the yen as I speak. And there's just a lot going on. We saw the treasuries tick up to 4.22. You know, I talked about maybe we're going to stall. No way. There's just massive selling coming into the bond market. I think we're starting to get a message that something's really wrong, and it's coming from the bond market at the moment. We saw the situation in the gilts and the craziness with going on in the UK where they have no prime minister. 44 days, I think, was all that trust lasted. So that's pretty crazy. Now they're talking about bringing Boris back, which is even funnier. They kicked him out, and now they want him back. So, yeah, crazy world, to say the least. I just want to talk a little bit about this situation in Japan, because I think it's getting pretty dire, and we may see what would be great to see, actually, I'll put it this way, is some kind of blow off top on the yen. Just let it spike up, get it over with, collapse, get a big reversal, and then maybe see some stabilization, and maybe that combined with some intervention. But everybody's watching closely what's going on with the yen and whether the Bank of Japan, the BOJ, is going to come in and do some intervention of some sort. But it's getting on the edge here, folks. I'm just telling you. There's a reason why the U.S. equity markets aren't rallying. There's really nothing to rally about. We absorbed a ton of earnings reports this week. A lot of stuff came out this week, and market just kind of absorbed it. We really haven't gone anywhere to speak of. We traded up a little bit, and we just couldn't get anything going. Yesterday, in last night's video in the technical section, I talked about getting above 37.44. Well, guess what? The high yesterday was, I think, 37. Let me just look at this, 37.48. So we got up there early in the session, sellers over, pushed the market down, and we pushed all the way down toward the S2 number. And a couple of things that really just kind of continue to come at me is we can't get out of our own way. Today is going to be, I'm going to proclaim this Friday the 21st as a huge pivotal day in this pattern. We're going to have to hold the 10-day moving average, and I'll go through all those details here in the technicals. But if we fail to hold right where we are right now, then we're going to retest the lows, and it could get really ugly as we come into next week. Expectations were still for a slight bullishness, but like I said, technicals will reveal that. We'll go through the usual night. We should be able to get through things fairly quick. The database is doing nothing. There's nothing going on at all, period. And, we saw a couple good earnings releases. We saw some bad. I saw somebody said, hey, let's cover Tesla. Maybe I'll fit that in. Why not? I think that stock appears to be in some pretty big trouble. And Elon needs to acquire Twitter, but while he can, I think. But so having said that, I'm obligated to cover Tesla, and I'll do that. Let's see here. I'll do that after the Russell. So make sure if you don't hear me talking about it after Russell, put something in the timeline. I'll make sure I cover it. I'm just looking at my notes here. Yesterday, economic stuff. Claims came in at 217, a little better. Continuing claims upticked. I thought it would. We're at 1.385. We're 1.36 last week. So definitely getting a little bit of an uptick in continuing claims. I think that will probably increase over the next several weeks. Philly Fed came in minus 8.7. Existing home sales came in pretty much as expected, 4.71 million. And that's probably the first time that the housing has come in with expectations, but maybe expectations have been lowered so much that it's within the right parameters of what's expected here. Tomorrow before the opening, we do have some earnings. We got Verizon, Amex, Schlumberger, and no economic numbers at all tomorrow. So it's going to be stocks and probably just a bunch of squaring up of trades. We could get, some volatility here. I'm just not seeing anything to really grab onto here that's really bullish or bearish as far as that goes. And I've been talking about this choppy sideways range. I'll go into that a little bit more here shortly. Just looking at my notes, so S&P finished lower. I talked about 2 days ago we needed to print a new high. We didn't. That was a problem. Now we had 2 days up. We're working on 3 days down as we're trading right now. Right now the futures are off, and the patterns are still in place that I've been talking about. So we'll cover that here in a second as well. But we're looking at S&P down 0.80, NASDAQ down 0.6. Russell got hammered down 1.24. And I've been talking about that pattern has been weaker than the others. It's been really predominant. So maybe the Russell is going to move that down. But I think that has everything to do with the interest rates. With the 10-year printing up over 420, this is a problem for the small cap stocks. And there's no more free money. We're looking at mortgages are around 7%. They're probably going to 8%. There's probably another 1% in all these markets plus. As I've been talking about, when we cover the 10-year, you'll see that. But just looking at my notes, I think we're good. Let's go ahead and get into the data. And there's really not much to look at, but we'll go through the motions here. Okay, so here we go. 187 buys, 378 sells. The database downtick from 20 and change down to 19.63. I'll just talk, there's really nothing going there. There's no traction. We can't get above 22. We got to 20. We're already starting to back off a little bit. And I'll just talk about this scenario that's going on with the database. The weekly database is really, we're sitting here at 21.84% bullish. So 8 out of 10 stocks, no position. We continue to virtually hold nothing. The only thing that appears to be wanting to work at all is the energy stocks. They're still somewhat in play. And we saw actually a bit of a reversal XLE stocks today, but for the most part, the general trend is still up there, but there's nothing to look at here. We have one sector on the intermediate level, which is services, and it's minus 8% on this last trade. It's been long for 58 days, and it's just sinking into the quicksand. And there's nothing. So we own 0 sectors. As far as the groups go, we have 18 out of 110 groups long. So there's just nothing long here, folks. And, when this market's all washed out, rightfully so, there's nothing there. So we continue from our portfolio standpoint, from our positioning in our database, just to be basically out of the markets. Like I said, we're 19% on the daily. I wouldn't be surprised if we do close lower today, that we see further liquidation coming in to Monday's action. And I do expect that weekly we'll see some liquidation, probably moving down to somewhere between 15 and 18% bullish there. I think we just continue to see the attrition continue because there's nothing to grab onto, as I just mentioned. Okay, so as we look at the S&P, it's interesting because the algos are still arguing that the market's going to improve. And I think if we hold the 10, I talked about this earlier, that 10-period moving average at the moment is 36.56. The low so far is 36.55.50. So we tested it. We also have right now S1 on the chart right now is 36.54. So we printed an S1 already. So here's what I would expect. I think we'll see possibly some recovery. These algos have been so accurate in figuring out these patterns. So there's still some upward Fibonacci projections, but in the end, it'll come down to how we close today. And I just want to make sure everyone gets what I'm saying, because sometimes you folks out there misconstrue what I'm saying. I'm not bullish here, but I do believe that the market's going to hold the support at the moment, and that's going to be this where we traded already. We could dip down below S1 right now. S2 is 36.32, and we get anywhere below that, then it's Armageddon's coming, and we're going to move down and retest that 35.02 level probably next week if that happens. But remember, if we close higher and we can get above at least the R1, which is 36.95, and then R2 is 37.18, we saw a number of setups in intraday today that was really interesting, and I'm going to take you to an hourly chart because I think that tells a story that I want you to be able to see. So let's go to that. Thought I had it loaded up here. Sorry. Let me just put that up. Oh, this is it right here. So we've got the hourly. The algos are suggesting that over the next several hours, maybe the next 3 to 4 hours, that we're going to firm up. We're going to have to get above the 10-hour moving average, 36.73. So that's going to be your resistance as you go through the night. If you're rewatching this video later toward the London opening, watch for that number. From that standpoint, above that, all of a sudden 36.92 is huge. But one of the things that we're able to trade around in the live room today was when we got down to the 200-hour moving average on this chart, there was some really solid support there. And it continues to be exactly that. The 200 right now is 36.66. We're trading right at it. It's trading 36.66 as I speak. And like I said, look for on the upside, I would look for the 90. The 40 is at 36.97, 36.90 on the 21. So there's going to be a ton of resistance up there, and that's also the R1 numbers that I just talked about. So it's going to be in my opinion, is that it's going to be critical that we hold this. We got to get back over 3,700. 37.18 is R2. There's some possibilities there, but there's no economic news coming out. These earnings reports that are coming out, I mentioned Verizon, Amex, Schlumberger. Are they going to be material? Probably not. It's Friday. It's been a lackluster week, so it really comes down, is there going to be a short covering? That's a possibility. Is there going to be news even out of intervention, out of Japan? Is there going to be something more, the BOE or something out of the UK? Who knows what we've got? Most of the news, and I was talking about this in the live room today, is that most of the news we're seeing is coming out of Europe right now. Europe is very, very sick. And we also have, we're coming out of the, China is coming out of the, we'll say, out of the closet from the standpoint the Congress, party Congress is just finishing. Looks like Xi Jinping is going to win again. But it's interesting because I read some of this stuff on China, and basically they're going not quite Mao, but they're going back in more of a security related economy. So is that because they're going to invade Taiwan? Is that because they're just looking at risk on the planet right now? Does this have something to do with the Ukraine, potential World War III? I don't have any idea. I'm not suggesting any of that, but I am telling you that the message, if you get a hold of that, what was released anyway to the planet, the message is clear, and it's about national security. If you look at U.S. policy, I don't want to get too deep in this at the moment, but U.S. policy has the same thing. They're not talking about the economy and all that. Biden's telling us we got the best economy in the whole world and everything's wonderful, but they're really talking about the security and the whole Ukrainian situation. All this stuff is forefront, and so we're seeing the same thing coming out of this party Congress, and it's perfect that they call it party Congress because it must be a party Congress. Maybe it's like a Shriners event. So anyway, I'll stop it there. But the point is that there's just a lot of geopolitical stuff. It is probably the worst possible environment we've ever seen. I just want to point out one last thing. You're going to start to hear a lot of folks talk as we come into year end, because we're in this fourth quarter now. You're going to hear people talking about, well, after the market declines 24% the next year, this is how the market usually returns. We have never, ever seen a market like this before. And what I'm going to tell you is we've never had, $32 trillion worth of debt. We've never had all of these situations that are happening. There's potential world war and everything else that's lurking in the background. And we've just never had anything like this. So to have expectations, if you look at the years where the markets bounced, none of this stuff was going on, by the way. There was not this level of uncertainty. So we still have a lot of work to do. The last thing I see, downtrends on the weekly. I'll go through this as we get closer to the end of the month, probably next week, maybe as we come into November. I'll get into talking a little bit about the longer term aspects and some of the trends, but the trends are all down. Weekly, monthly, quarterly, they're all down. And even though we might end up in some kind of large consolidation phase for a couple months, just because of all this uncertainty, there's nothing to be excited about at all. All right, so next we'll go to the NASDAQ. Same pattern that we were looking at on the E-minis. Algos are all pointing to the upside, telling us that things are going to improve, that the moving averages are going to turn out. And the same values here. Watch the 10 and 21 day simple averages. If we can trade back above there, then we got a shot at trading into some of these upward targets. Those of you who have the indicators, just make sure you put the fib target on a strength of 4 and 4. You'll know what that means if you have it. And that should give you, that will give you these exact parameters that are up here right now. The targets here for high target 1, 11,323, which actually heard he's been met, but 11,640 and 11,840 are the two upward targets here. But we're going to have to stay above this 10-period moving average, and preferably if we could close above the 21 on the NASDAQ, that would be encouraging. All of the algos are saying that's going to happen. I'm saying I'm doing the thing. Show me the money. I want to see the close before I start making any commitments at all to this market. So we'll just continue to watch these algos together, but they are suggesting that over the next couple of days we should see these moving averages start to turn up. The projection is to get into trend mode on the 10-period moving average, which means we have to stay above the 10. That's why it's so important today for Friday to stay above there, especially as we look at some of the weekly charts. I actually have a number for the S&P. I know I'm commingling here, but the S&P would have to close over 3722. And let me put this up here on this chart. I'll just give you, we don't even have a chance at getting above the value that's important here, which would be back above the 200-week moving average, which is way up at 11,700. I guess that's certainly within the realms, but with the way that things are set up here, we've already printed STX weekly on the NASDAQ, so we've already maxed everything out basically from what is likely to be, anything normal here at all. So we're, like I said, the close today will mean something, but I'm going back to the daily chart here. That 10 and 21 period moving averages are the place to pay attention to. All right, next we'll cover the Russell. As I was talking about, we already bounced off of this 40-period moving average. The 40 is what's interesting about the algorithms on the Russell is we're not seeing any type of acceleration here. We're seeing stable. So sideways is what is being projected here for the next several days. And you look at, this is the daily, and if you look at the market grid over on the far right here, we're looking at a pretty broad range, 1758, 1648 on the full range from RXT to STX. But if we look at the more probability here, the 10 and 21 are also in play here. Those numbers are sitting here. Let me just get those numbers up here. They're at 21 is 1702 and the 10 is 1708. So let's say we've got to get back above 1708 to get any action going there at all. We look at the market grid S1 1690. We're trading right now at 1698, so 99, so we're just above there, but we've got to get over that 1708. We can close above there, then we get stable. We go sideways. So the absolute best that I can tell you we're going to get is sideways. Sideways with a bias to the upside. We close under the 10, then it could get ugly. And I would use for today S2 on all of these indexes. So if you have the indicators, look at S2 on the daily. If we take out S2, then probably it's not going to be a good day. We could see a huge day down and an ugly close for the week. But like I said, on at least the NASDAQ and the S&P, we're not getting those type of indications that that's what's going to happen. In fact, what we're seeing is stable to up. So we'll see if we can rebound from where we are right now. Like I said, we've traded for the most part on the NASDAQ and the S&P. We've already traded S1. We hold S1. That should be good, and we've got to get back over those averages. Hopefully, I've made myself quite clear. Be very, very cautious here because volatility is still kicked up through the roof. It's so crazy volatility. And the last 2 days, I would say, we've been in a live room. We've seen the order book fairly thick, which means it's liquid. There's pretty good trading on both sides of the market. That's stabilized. So a little better liquidity, but nothing exciting here, folks. This is, like I said, at best, sideways with a slight bias to the upside, and just watch these numbers I put out here tonight. All right, here we go. The 10-year. There's something interesting happened today because the 30 has been a bit below the 10. Basically, the 30 ended up at 421.6, the 10-year 422.6. So they all of a sudden the 30 started to catch up a little bit here. I think that's somewhat of an interesting scenario. But basically, what I think we're seeing is we are seeing quietly there's some big selling coming into these bonds. I mean, if there's a bid, they're just hitting them and taking them out. I mean, this is an aggressive type trade that's going on here in the bonds right now. So like I said, there's probably something really, really broken in the background. We kind of know that. And I guess the real question, does the illiquidity, do the problems that were in the gilts and in the pension in the UK, is there going to be contagion here? We'll find out. But at the moment, they're just hitting the bids every time they see one, and they're just taking them out. And so it's pretty aggressive. I talked about yesterday, we did, I believe, get a bit of a, sorry about that. We did get a bit of a, an aggressive selling. And once we took out the 417 level, it was just like, I mean, they were just all over this thing. So we're looking at the PPMs. Now, this is a bad thing because PPMs are accelerating. This is on a daily, which means rates are accelerating. So we look at the ranges for Friday. We're looking at R1, 425. The last time I looked a little bit ago, let me get you an update here, is on the overnight markets. right now we're looking at 423.4. So we're trading basically just a basis point above where we were. But if we get, you look at the range, 425 is R1. Through that, R2 is 427, R3, 430. We could start to see these numbers come into play real quick. And if that happens, I believe that we're probably in trouble on the equity markets. And those of you that are short, then you're probably in a good place to be. Okay, so what we're looking at here is really the potential of the acceleration. I've been talking about these yields here for a while. 503 is the target. If we get there, that puts mortgages at 8%. That's pretty much a disaster for that. So, well, that's what's going on, folks. This thing is on the edge, like I said. I'm not going to cover the yen tonight because I covered it in detail last night. But we are trading, like I said, over 150, and that's just not a good thing here. I'm just giving you a check here on the far as it goes. Yeah, 150.23 last trade. So, yeah, we got a lot of problems out there, folks. So maybe we get a sell-off tomorrow, but I'm telling you, the algos are saying we stabilize and we see it like a slight upside to the markets. We'll see. We'll talk about it on Sunday night. All right, next we'll cover crude oil. Crude oil continues to project sideways, but there's a but here. We have some downward projections here. We got some fib targets on the downside, and those fib targets on downside 79.70. This is daily. 74 and 71. So we definitely have some downside here, and the algos are confirming this, that we're sideways to down on this market. The key level will be if we can hold 79.70. We get through that, then watch out for these other numbers here. It should get going pretty good there. As far as, let's go to a weekly chart here, and just so we can see these patterns here. Weekly still suggest, I know this is a broken record, that the 82, 92 range is likely to stay in place. But ultimately, we're seeing something here on the downside on the 40. So just looking at the moving averages, this is weekly. The 40-week moving average is going to roll over here. And you can see the algo is projecting how it's going to roll. PPM2 is suggesting that it's going to try to flatten out, but it's still going to be down substantially. This is down 1.3, so there's still lots of downward pressure on crude. The 10 is right now at a minus 0.85. That's going to be a cap at the moment. That's 86.30. So 82.86 for the moment is going to be probably the range. If we get above the 86 level, then 88.90. But I think what looks like is going to happen here on an intermediate basis is we're going to stay to the downside. And so far on the week, we did basically did an S2 on the downside. So we have definitely a downtrend in crude. We're not really seeing anything that's substantial, and some of these downward targets that are just on the weekly is suggesting that we could go to the 200-week moving average, and that would put us down quite a ways here at the, let me just get you the numbers on this projections here. We're looking at, like I said, 71 would map out with the daily extreme, but 62.89 is right where we're looking at the 200-day is 64.69. The fib target 3 is just below that at 62.89. So that's pretty substantial. I guess at some stage, right? That they're going to buy back the SPR. Maybe that's at the 200 if we get down there. And if that's the case, then there'll be good oil traders, right? Selling above 100 and down, and then buying at 60 would be a pretty amazing trade. I have to give them that one. But unfortunately, it was for political purposes, and we have seen an impact at the pumps and all that stuff. I don't cover gasoline, but maybe I'll add that into some analysis at some stage. But everything looks to me like the big downtrend on the intermediate level on the crude oil. All right, I'll stick with the weekly chart, and we're just continuing to see gold is at 1630. The low a couple of weeks ago, 1628. Hang on, let me get the number. Wrong number. 1622. And it looks to me we're trading just about at S2. S1 is 33. We're trading 30. The low's been 26. We're basically trying to get down to a potential S2. And like I've been talking about, I'm going to raise this up a little bit. Let me change the scale so you can see this. But the downward projections here now are there's 3 downward projections below 1620. The next level is 1540, 1494. Final market I'll cover tonight is Bitcoin. Let me expand this scale just a little bit. Bitcoin's still under a lot of pressure. You get, this is weekly that I have up here. So weekly is showing a minus 2.55. It's actually accelerating. And let me do one thing here real quick. Can't figure out why sometimes the algos don't work on TradingView. They don't refresh properly. But anyway, what we're looking at is there's still a lot of downward pressure here. And while we traded up toward let me just bring the numbers up here. We did get up to the 19,702. That was pretty much right into the 19,676 was R1. So we traded R1, the support 18,852, and so far we've had an 18,905. So S1, R1 on a weekly. So we're just continuing to watch this. Lots of major downtrend. Let me expand this just a little bit so you can see this. But you can see that the angle of attack on these moving averages are huge. They tried to bottom out a few weeks ago. They didn't. We got this big rejection last, when was that? About 5 weeks ago, and they're in trouble. So if we get through this, there's a number that's been hanging out there for a while at right around 10,000 on Bitcoin. So I would be very, very careful with this. I guess those of you that are hodling don't really care. Yeah, I don't think if it gets through these 18,100 level, there's not going to be any 17 number. It'll be much, much bigger, I believe. And the way this is trading, and especially, folks, let's just I'll just come back up, especially if we get some of these crazy interest rate numbers, 503 on the 10-year, the 40. It's interesting that the 20-year, I'm sorry, I'll get it right. The 30-year is only projecting around 460, 480, where the 10-year is actually forecasting a 503 to 550 range on the upside. So it's going to get real interesting, folks. This thing is of a long ways from being over, and all of these assets are under pressure. So, like I said, I think probably the major thing to keep an eye on is the bonds. If they start to crack even further, then we could see that flow over in equities and certainly over to gold and Bitcoin, and there will be nowhere to hide. Okay, so like I said, from a portfolio standpoint, we're in cash for the most part. There's a few things I own. Like I said, some of the oil seems to work, but I just talked about oil being in a downtrend. So not oil itself, but some of the oil stocks. And as long as they stay above 75, I think that the XLE will be able to hold its own. If it gets below 75 and we hit some of these numbers I just talked about on crude, then there's going to be a problem with some of these stocks. Okay, folks, this is going to do it for the week. I appreciate everybody that's participating and watching these videos. Those of you in the live room, what can I say? You guys are amazing. Get some great people in there. And some of you have been around since the very beginning. You know who you are. Thank you again. It's almost unbelievable. We started that in November of last year. So those of you who don't have the indicators, get them. You get 30 days of free access to the live trading room. So, and things are going to get real exciting. Like I told you, there's a lot of changes coming to the channel. A lot of things going to be going on in the next several weeks. So anyway, folks, thank you again for watching, and make sure you subscribe, hit the like, and then also make sure you hit that notification bell. Thanks so much for watching, everyone. Have a great day trading tomorrow, and I'll see you on Sunday night. Have a good weekend. Hey, I'm back. I didn't see the Tesla. I forgot. I'm going to do Tesla. I'm going to come back and do Tesla. Okay? I really apologize. I did tell you I was going to do that. So let's bring up Tesla. I'll get it on screen here in just a minute. Yeah, you're not going to like this, but let's do it. All right, folks, here we go. So Tesla. We have some fib targets to the downside right now. Boy, oh boy. Fib target 137. We also have the 200. I think that won't be met, but it could be on an intraday blip or an intra-week blip. We have the 200 moving average at 172. It looks like that's going to get tested, and it's not a pretty scene. And I'm going to bring this out to a monthly, and I suspect that Kathy Wood is not going to be very happy about that as well. The Augos are also predicting this is a weekly, that there's going to be more weakness. There's going to be an acceleration in the downtrend. Right now we got PPM1 minus. This is weekly, minus 3.40 and ppm 2 minus 0.83. ppm 3 is at minus 1.27. Anything under 0.25, minus 0.25, is a downtrend. These are massive downtrends that will take absolutely weeks to going on to even try to turn this around. If we hold the 200, that's about all it's got. But I'm not even, I even hate to mention the other numbers because they're ridiculous. $69 and $27. I don't think it gets there, but I did see in the report, by the way, when Elon was going through the earnings, he mentioned something very interesting. He was talking about maybe a $10 billion stock buyback. I think they know this thing's about to roll here big time. And I thought it was very interesting, the dialogue and some of the earnings call that the other, I didn't get to listen to all of it. I got to listen to some of it. And I think it was interesting of talking about a stock buyback. So looks like they need to support the stock. So maybe the 200 will hold. I think ppm 1 is about it. Just on this chart, I won't blow it back up, but there was a similar number going back a ways ago. And actually, I am going to go full screen because I want to bring up one more chart. I want to bring up the monthly chart here. And this has been around for a while. So the 40-month moving average is going to be similar to the 200. But if you look at the ppms on the monthly, this is a big rollover. And the hope here is that you get trading between the 40, we'll call it the 200 week, around 184, and get sandwiched between the 1021, which is going to be 277, 275. And that's, I'll just put this out here, that's going to be about all you can expect here. This stock's under big time pressure. And, I'm not a big EV fan. I think it's kind of a joke in a lot of ways. And because it's just going to be impossible to get that kind of batteries and the materials. I forget, I won't quote any numbers because I don't know them well enough, but there's a lot of issues with the whole EV sector. And even though everybody's doing it, doesn't make it right, So it's probably not a fad. I think they're interesting vehicles, but they're not going to take over fossil fuels for a very, very long time, unless somebody comes up with a better battery, a better way to create electricity, or we embrace, nuclear or something, because there's no way you're going to get solar panels and charge up every car on the road. That's going to be pretty funny. So anyway, folks, sorry, I forgot the Tesla, but I made good. You folks, once again, I'll sign off again. Make sure you subscribe and like this channel. I pay attention when I tell you guys something. I try to keep the integrity and get it out there. Thanks again, and I will talk to you on Sunday night.